Hi, welcome back to Joe Blogs. In today's episode, I want to talk to you about the Russian oil business, and specifically how Russia has been managing to evade the price cap and sell its oil for more than $60 per barrel. Now, if you've been following the channel, you'll know that I've posted a lot of videos talking about the Russian oil industry. And one of the key sanctions against Russia to try to limit the amount of revenue that it was earning from its oil business was the introduction of a hard price cap of $60 per barrel for crude oil that was introduced by the G7 on December the 5th, 2022. So that price cap has now been in place for more than 12 months. And one of the questions is, how successfully is it being implemented? And in today's video, we'll go through some of the data looking at the price that Russia has been selling its oil for, and I can tell you that it's been more than $60 per barrel. So Russia has been achieving more than a price cap, and you may be asking, well, how's that possible if the sanctions are in place? And in today's video, we'll go through the details as to how that oil has been transported, how a lot of companies have managed to evade the sanctions that have been put into place by the USA and the rest of the G7. We'll also have a detailed look into which countries are helping to facilitate the movement of Russian oil, what's known as the dark fleet and the grey fleet, what the difference is between those two different types of vessels that are moving Russian oil, in many cases illegally. We'll also have a look at the age profile of these tankers, because in a lot of situations, these ships should have been decommissioned. They should have been put out to pasture a long time ago. And there is now a genuine risk of some sort of major oil disaster happening somewhere around the globe as a result of these ancient ships. In many situations, they are rusty and don't work properly, actually failing and sinking, and that could cause a huge environmental problem. And a potential oil disaster also raises the question as to who's actually insuring these vessels. If one of these ships does go down, who will be responsible? Will it be the country that's officially recorded as operating that ship? Will it be Russia? And will there actually be any insurance in place to be able to pay for the cleanup? And then finally today, I'll wrap up with my summary and talk about whether or not the West will ever be able to sanction these vessels if there's some sort of process in place to be able to clamp down on this illegal trade in Russian oil, or if this situation is now the new norm and is going to continue forever. But before we get into all of that, I'd like to say once again, thank you so much to everybody that sent me a YouTube super thanks or bought me a coffee. Really appreciate that. And if you've signed up as a patron or a YouTube member, you'll be enjoying the benefits of being able to see my videos early, as well as seeing some other videos. So thank you so much for that. And anybody that bought a ticket in the recent raffle, also thanks very much for that. There is now a winner who's based in Australia. I'll be doing a separate video to talk about that. So thank you to everybody that did support the channel through any of the methods that I've just mentioned. This chart shows the movement in the price of Brent crude oil over the last 5 years. And what this shows is that the current price of around $75 per barrel is actually the lowest that oil has traded at since December 2021, which was before Russia's invasion of Ukraine started. And I think it's interesting to look at that $75 line, because over the last 2 years, oil prices have traded at a premium to that level, and one of the reasons for that was Russia's invasion of Ukraine. This chart shows the movement in the price of Russian crude oil over the last 5 years, and the shape of this chart is different to what we just saw for Brent crude oil, and the current price of around $57 per barrel equates to one of the lowest levels that Russian crude has been trading at since January 2021. And of course, the reason that the shape of this chart is different to Brent crude oil is that following Russia's invasion of Ukraine, Russian oil started trading at a discount, unofficially at first, and then the official $60 price cap was introduced by the G7 on the 5th of December 2022, so just over 12 months ago. And if we now look at what's been happening with the price of Russian crude oil over the last 12 months since that price cap was introduced, you can see that the trading price of Russian crude has traded above $60 on 3 separate occasions over the last year. The first of these came at the start of March 2023 and lasted for a few days. The second came at the start of April and lasted for a few weeks. And the third came at the start of July and lasted for 5 months. And the two main drivers as to why the price rose above $60 are the market price of oil and the amount of oil that's being transported by tankers that do not fall under the price cap. If we quickly jump back to this chart showing the movement in the market price of Brent crude oil, you can see that in March and April the price of a barrel of oil was trading above $85, and then from July onwards we saw a prolonged increase in the price of oil, predominantly as a result of the supply cuts that were announced by OPEC+. And as the market price of oil rose, the average price that Russia was selling at also went up because a percentage of Russia's oil was being supplied either directly by Russian tankers that were not affected by the price cap or shadow fleets which were also managing to avoid the sanctions. This chart shows the global cargo fleet of tankers that are distributing oil, and they're split into three categories. The vast majority of tankers, around 82%, are classified as cleared. And these are tankers that are not exhibiting any suspicious static conduct, such as flag hopping or irregular ownership structure. Behaviourally, these vessels do not indicate any participation in deceptive shipping practices, such as going dark for periods of time that might suggest involvement in a commodity trade. An additional indication of this fleet's legitimacy is the area in which they operate and the level of regulation of the ports and terminals they frequently call. Around 10% of the world's tankers are classified as being in the dark fleet, and these are tankers carrying out clandestine trade of sanctioned commodities using diverse methods to hide the origin of the oil that they're transporting. This fleet often utilises what's called dark activities, which is the intentional disabling of the automatic identification system which records the movements of all tankers. In addition to masking their movement, these ships also use other deceptive practices such as ID and location tampering. The dark fleet is characterised by weak ownership structures and the use of multiple flags of convenience over short periods of time. The size of this fleet has fluctuated substantially with each new regulation being published, and it's currently estimated that there are around 1,100 tankers operating as dark vessels. Cargo ships that are classified as being in the grey fleet represent around 8% of the global fleet, and these vessels represent a completely new phenomenon which have evolved following Russia's invasion of Ukraine. Overseas companies have been quickly established following the outbreak of the war to obscure vessel origins and ownership and to appear law-abiding and non-sanctioned. This fleet is described as grey because it's difficult to determine legality and sanctions compliance in many cases. A significant number of these vessels also switch flags, a technique referred to as flag hopping frequently. As you'll be aware, countries including China, India and Turkey have significantly increased their trade with Russia, and this has led to the creation of a quasi-legal fleet working in parallel to the cleared fleet to carry out this trade. And it's estimated that there are around 900 vessels currently operating in this grey market. This chart shows the age distribution of both the grey fleet and the dark fleet vessels operating currently. The breakdown of the grey fleet is shown by the bar chart on the left-hand side, and the dark fleet is shown on the right-hand side. And what these charts show are the ageing nature of both the grey and the dark fleets. And obviously this represents operational risks. Many of these tankers are actually classified as being too old and would have been decommissioned by the major shipping operators. However, the new owners are utilising these vessels to make huge amounts of profit, but are potentially running the risk of having major disasters. The breakdown of the 900 vessels that are classified as operating in the grey market shows that less than 5% are under 5 years, less than 20% are under 10 years, around 15% of the vessels are between 11 and 15 years old, 20% are between 16 and 20 years old, and 40% of these vessels are over 20 years old. And the situation for the dark fleet is actually worse than that. Less than 10% of all of the vessels are under 10 years old, 7% of the vessels are between 11 and 15 years old, 35% are between 16 and 20 years old, and 55% of all of these vessels are over 20 years old. And when you consider that some of these vessels are carrying up to 1 million barrels of oil in a single cargo, it really puts into perspective the risks that these operators are running. These companies are transporting huge amounts of oil, which could have a massive environmental impact if they were to spring a leak or sink. And the majority of journeys that these companies are running are in vessels that should have been decommissioned already. And one of the questions that this obviously throws up is who's insuring these vessels? If one of these ships does sink and it becomes a major environmental disaster, who will pick up the bill for cleaning up? Now, in terms of the legal ownership of the vessels that are operating in the grey market, 49% are registered as being owned directly by Russia, 29% by Greece, 10% by the Marshall Islands, 7% by Liberia, and 6% by Malta. And for the dark fleet of 1,100 vessels, 26% of those ships are owned by companies registered in the United Arab Emirates, 22% in Greece, 18% both Hong Kong and the Marshall Islands, and 17% Liberia. Now, interestingly, despite the ownership structure that we just looked at, a lot of the vessels sail under different flags. And this chart shows the breakdown of the flags that the grey fleet is currently recorded as flying under. Now, not surprisingly, Russia represents the largest percentage at 42%. However, that's less than the 49% ownership that Russia has. The second largest nation is Liberia, which represents 22% of the grey fleet, compared with only 7% ownership. The Marshall Islands represent 16% of the fleet, compared with only 10% ownership. Malta 12% compared with only 6% ownership. 9% of the grey fleet are sailing under a Panama flag, despite the fact that Panama does not actually own any of these vessels, and a further 20% are sailing under a myriad of other flags. And if we quickly jump back to the ownership structure, you can see that Greece actually is recorded as owning 29% of all of these vessels. However, very few of those ships are officially sailing under Greek flags. And if we look at the breakdown for the dark fleet, the biggest single nation in terms of the flags that these vessels are sailing under is Panama at 34%, despite the fact that Panama doesn't own any of these ships. The second biggest nation is Liberia at 28%, which compares to 17% ownership. 15% of these vessels are sailing under a Marshall Islands flag, compared with 18% ownership. Interestingly, 14% of the dark fleet vessels are sailing under a Russian flag, despite the fact that Russia officially doesn't own any of these vessels. However, it does raise the question as to whether or not Russian entities do own these vessels and have just registered them in other countries. 8% of these vessels are sailing under a Malta flag, despite the fact that Malta doesn't own any of the vessels, and the other 38% are sailing under a myriad of other flags. And if we jump back to the ownership chart, you can see that the United Arab Emirates, Greece and Hong Kong, between them, own 66% of this dark fleet. However, the data shows that very few of these vessels are sailing under these nations' flags. And once again, it raises the question as to whether or not these countries do own those vessels, or if Russia has entered into some sort of agreement with these nations. This chart shows the ultimate destination of the oil that's being transported by the dark fleet. And not surprisingly, the top two destinations are China and India, which between them account for the vast majority of all of the oil that's being transported by the dark fleet. The third highest destination is the Netherlands, which operates as a hub for oil traders. Fourth on the list is Turkey, followed by Bulgaria, Italy, Germany, Singapore, Greece and Belgium. And the top 10 destinations for the grey fleet deliveries are similar, with China and India once again representing the two largest markets, followed by Turkey, the Netherlands, Italy, Singapore, United Arab Emirates, Greece, Egypt and Belgium. And this chart shows the companies that were the biggest buyers of Russian crude between January and September 2023. The single biggest buyer was China National Petroleum Corp, which bought the majority of its oil directly from Rosneft. The Russian businesses Lukoil and Litasco were the next biggest buyers. And what the rest of this list reveals are a variety of different trading businesses that have been buying Russian oil with a view to selling it on to other parties. And many of these companies, including Nord Axis and the amusingly named Bellatrix Energy, if you're a Harry Potter fan, have been formed in recent years, and the ownership is unclear, and there is a question as to whether or not Russia owns some of these businesses and is basically buying oil directly from itself to then sell on to third parties. So what's the summary and conclusion today? Well, I wanted to post this video because the oil price cap, I think, has been one of the most controversial things that was brought in to try to reduce the amount of income that Russia was earning from its oil. And the reason that it's controversial is that it isn't an outright ban. The G7 could have come out and said Russia is not allowed to sell oil to anybody, and they could have tried to enforce that. But the problem that that would have caused for the global economy would have been immense, because the supply and demand dynamics for oil are very finely tuned. There is a certain amount of oil that's produced every day, and there's a certain amount of demand. And obviously at the start of the Ukraine war, inflation was at really high levels all around the world. So the last thing that global leaders wanted to do is cause further inflation by having a huge spike in oil prices. Immediately following Russia's invasion of Ukraine, we saw oil prices rise above $100 per barrel, which was the first time for a long period that we'd seen oil at that level. But if the oil supply from Russia had been completely closed down, we could have seen prices getting closer to $200 per barrel, and that would have had a disastrous impact on the global economy at a time when it was already very fragile. So the oil price cap was put together as a way of allowing Russian oil to still enter the global markets, but to minimise the amount of profit that Russia was making. And $60 per barrel was seen as being an appropriate level at the time when the oil price was sitting at around $80. So the $60 price cap at that time represented a discount of around 25%. Now, one of the problems that the G7 have is that they don't have any control on what happens to general oil prices. And as we saw from the data in the chart earlier, during the summer of 2023, oil prices started to rise significantly as a result of the fact that OPEC Plus decided to cut back on its supply. The countries in OPEC Plus were not happy that the global demand for oil was falling as a result of a slowdown in the global economy. They didn't want to keep supplying large volumes at low prices, so they decided to deliberately cut back on their production to push prices back up. And the problem from the G7's point of view is that as prices rose to $85, $90, $95 per barrel, the $60 price cap that was being enforced against Russia started to represent a greater and greater discount to market prices. And in situations like this, the market will always find a way because there is a lot of money to be made. An oil tanker can transport around 1 million barrels of oil. So if you're talking about a discount to the market price of $30, that's $30 million of profit that is potentially sitting on that ship. And when you're looking at it in real money terms like that, people will come up with ways and means of being able to avoid these sanctions. And that's exactly what we've seen in today's video. There are now around 2,000 ships operating around the globe, many of which are past their useful life. They should have actually been put out to pasture a long time ago. But if you're a middleman operator and you commission one of those ships and you pick up a lot of Russian oil and then deliver it to India or China, you could potentially make $5, $10, $15 million profit personally from that transaction. And that's one of the reasons why the grey and the dark fleets are doing so much business at the moment, because there is a lot of cash to be made. And one of the things that you can do with oil is disguise the actual price, because the price that somebody like India or China pay is a delivered price. It includes the base cost of the oil that's being paid to Russia, plus the delivery costs. And when you've got a situation like that where you can add your delivery costs onto the total price, there is a huge amount of wriggle room in terms of how you break that down. So officially, if you're a grey tanker, you could be paying Russia $60 per barrel. But if then you add on $20 per barrel for your transport costs, the delivered cost would be $80. And therefore China and India can legitimately pay $80 per barrel for that oil because $20 of it was delivery costs. Now, in terms of how much it actually costs to transport that oil, that obviously is a grey area, which is why we've got this grey fleet. And the operators of those grey fleets could well be paying Russia $70 or $75, but disguising the additional payment as delivery costs. And I think this is the area that's going to be very difficult for the G7 to be able to clamp down on and impose the sanctions. Because firstly, you've got to get the information of the prices being paid by India, China and the middlemen. And of course, that's not that easy. And then when you've got that information, you then have to work out the breakdown between delivery and the base price being paid to Russia. And then you've got to prove that the delivery costs were overinflated. And even if you do that, you then have to prove that some of that money was paid to Russia. And when you take into account there are now thousands of these vessels moving oil on a daily basis, you can start to see the logistics and understand why it's going to be really difficult for the G7 to actually police what's going on the ground. Because if these middlemen say that the transport costs are $20 per barrel, obviously the industry can say, well, that's too high. That isn't what the market is telling us. But if you've got old vessels that are theoretically more expensive to run and they're moving slower, and there are therefore other factors that can explain why those transport costs are so high, it's going to be really difficult to prove that Russia received more than $60 per barrel. So the overall summary of today's video is that over the last 12 months, Russia has been selling oil above $60 per barrel, above the price cap. However, a lot of that was driven by what was happening with the market price of oil. As it rose above $80 and $90, it made it much easier for Russia to be able to achieve a price above 60. However, the market price is now starting to come down significantly. It's currently sitting at around $75 per barrel, which is going to make it much more difficult for Russia to sell above 60, even if it does manage to move larger volumes through the grey and the dark fleet. So as the general market price of oil comes down, so will Russia's revenues. However, one of the biggest risks globally that we've identified in today's video is that this dark and grey fleet is old, aging and decrepit, and the likelihood of some sort of environmental disaster happening has increased significantly over the last 2 years as these ships transport bigger and bigger cargoes of Russian oil. And the big question is, are these ships actually insured? If there was some sort of disaster, if one of these ships sinks and we have a massive oil spill, who's going to pick up the cost of that? Because there is a real possibility that a lot of these ships are operating without genuine insurance. And if one of them goes down, it could be both an environmental and financial disaster for the global economy. So hopefully you've enjoyed today's video, you found it useful, informative and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end. And here's something to put a smile on your face.